Been asked by a few people how I invest in investment trusts, and I've put together a Google sheet that automatically populates data from the web that explains how I do my investment. I look at investment trusts that are making new highs. That's my initial screening point. And I put investment trusts into different baskets according to the geography or the specific sector that they represent. So you can see here we've got global investment trusts, some look at private equity, some look at technology or healthcare. I have a buy criteria that pulls up certain investment trusts. Then I also give some a gold medal criteria where they've got short-term strength that makes them a buy, and then long-term annual growth over 20% that gives them the more longer-term momentum that I'm looking for. If they're both in gold medal and buy, then the conditional formatting highlights them as green, and it's these ones that become my portfolio. I then also look at the best returning funds over different time periods, and I use a drop down to just select different time periods, and it pulls up different funds. So we can see here some of the Baillie Gifford investment trusts, US growth, there's Baillie Gifford, so's Scottish Mortgage, so's Pacific Horizon. Those have been the best performing investment trusts over the last year. I also look for potential pullbacks, which is where it's had 3 down days in a row. My main focus is on global investment trusts because these should be able to pivot towards the most attractive shares anywhere in the world, any sector. So I look at market capitalization, and the bigger the market cap, the better really, because it's able to attract more investors' funds. I look at how well it's doing relative to a 52-week high, and then returns over different time periods. So based on 1-year returns, I just sort for which one is the best. That then gets criteria. Based on 12, 6 and 3-month average returns, I again look at which one returns the best. You can also look over a slightly shorter time frame if you want to capture something that is more moving towards momentum in a shorter time frame. And here we can see that Herald Investment Trust has done really well over the last quarter, and it's clearly beaten Scottish Mortgage over that time period. So that's partly why it's coming in here. I can pull in the moving average data, recent price. Then what I do is I look at how an investment trust performs relative to its ETF benchmark. So an investment trust will have higher fees because it's actually managed, it's trading more possibly, and it's got to pay fund managers hefty wages, so it has to outperform its passive equivalent. And as you can see, a worldwide fund only delivered about 7%, this is saying, over a year. Investment trusts did significantly better, so quite a lot of them have outperformed. Then I've got the gold medal criteria, which is basically 20% growth or more, and then outperform criteria as well. So we've got this mixture of long-term and shorter-term performance, and that's what gives it the gold medal rating. Investment trusts, we haven't really decided what group they're in. I put them into other, so we've got some mining there, some environmental, but I've got things like technology here. There's only really 2, so I compare Alliance Technology to Polar Capital, compare them over different time frames, and we can see here that Alliance wins across all the criteria, and that gets the gold medal rating because it beats the passive ETF. So then what I also do, I look at the most popular ETFs that come from the Interactive Investor website. I can put it in using import HTML. So generally the popular ones, they'll be having net flows coming in it's not the sole buying criteria, but it's just interesting to look to see which ones are popular. And then what I do is put together a table based on the gold medal winners. So I put in the ticker, I look up the category, which is the corresponding sheet that the fund resides in, trust resides in, give it a weighting, and then away we go. So the strongest global ones would get a 20% rating. Some of the weaker sectors where maybe the fund does well, but I think the overall sector isn't perhaps where I want to be, would get a lower weighting. So populate all that, it ranks it automatically, showing which ones are the best. I look at the maximum drawdown. So if I'd held the fund, just looking on a weekly basis, what's the maximum loss I would have suffered from the high point? So some aren't really that volatile at all, Monks less than 6%, and then some biotech a lot more volatile, more than double. I look at the number of up weeks, so out of about 27 weeks, how many weeks did the portfolio return a positive number? So some will produce higher returns, but over a slower time frame, so you get a higher number here. So then I look at, for the portfolio I put together, what's the maximum drawdown, performance up weeks, and what's the approximate 27-week return. So I put all that together, that's then my portfolio, and away it goes. And then this will just populate automatically whenever I load it up, and I can just come back to here, look at which funds are in the green, and then use that to update my portfolio and make buy or sell signals as I see fit. This file is available if you go on eBay and search investment trust Google Sheets. You'll find it, and so if you're interested in using the sheet, you're more than welcome to give it a try.